What's going on, guys? Welcome back to the channel. So today we're going to talk about the advanced monthly child tax credits that we saw during the pandemic, which are back on the table. So let's talk about that. There's some things floating around that I haven't seen in the text, but I'm still going to point them out so you can see what is in the works and also to make sure that you qualify. So it's not just, I'm going to receive this. We need to make sure that you qualify for it as well. So before we do all this, let's talk about the child tax credit just to give you an idea of where we're at right now. So I drew it up on these whiteboards here so we can walk through it together really fast. So right now it's $2,000 for under 17. So 16 and under as of December 31st. This one gets a lot of people confused. Those 17-year-olds out there, sorry, they don't qualify. And if they're not 17 yet, but they're going to be 17, December 31st is the date. So they have to be under the age or 16 through December 31st. So as soon as they hit 17 in this tax year, they don't qualify for any of it, but they could still be a dependent, but it's not the child tax credit at $2,000. It is refundable. So what this means is that if you have zero tax liability, and you could still get $1,400 back in a refund. So that is also going to change. And then the qualifications for it right now for this portion to it, and that's what got a lot of people confused the first time around, was that there's like basically two different thresholds on this thing. So let's pay attention. So singles right here, head of household, is $200,000. Married filing jointly, $400,000. And it looks like that is basically going to stay the same for the 2000 portion, but similar to the what we saw during the pandemic, there will be that first threshold that will be significantly lower. So let's go ahead and talk about that. So let me just pull it up on the whiteboard before we go through some of the additional text that I've pulled up, including the actual proposal text. So what is it going to be? It's going to be that $300 that we saw during the pandemic under the age of 6. And so you can see the math right here. I just drew it out. 12 months, $300, $3,600. Now, if your child is born in the middle of the year, then obviously then it's not going to be for 12 months, or maybe not obvious. It's going to be less than 12 months, but you're still going to get that $300 check. Ages 6 through 17. So that's a difference as well. The proposal is saying through 17. So actually up until 18, same qualifications, December 31st. But that would be through age 17 for $250. And I did the math again. So it's $3,600 for under age 6. 6 to 17 would be $3,000 for the year. And then it is fully refundable. So that is up from just the $1,400. It's going to be fully refundable. There's also this thing floating around about a $2,000 baby bonus, but I couldn't find that in the text. Maybe it's buried in there. I went through it once and I could not find it, but that doesn't mean that it's not going to be in the final proposal, but the one that I saw. So let's go ahead and pull this up on the screen and take a look at this together. So here is one of the representatives from Congress, Susan Del Bene. I don't know if I said that correctly, but she is one of the representatives that is proposing this change, that basically making this act permanent. And the name of it is the American Family Act. And it kind of threw me off at first because it's the same name as it was before. So it's obviously a revival of this thing, but adding some benefits here. So let me go ahead and, again, another one of these fast fact proposal sheets, but neither of these showed the $2,000 for a newborn. So there's where is it? This website right here. So no, this website, I don't even know this website, rollcall.com. I have no idea, but it's saying basically that there's this $2,000 right here. That's up from the current maximum $2,000 benefit. No, that's what we already have. Where's that baby bonus? It is right here. So if we add those two numbers together, you're going to get $5,300. And yeah, it's right there in the first line. A $2,000 payment for newborn babies. So if they were born in January, then that would equal $5,300. So $2,000 right up front, January through the end of the year, that additional $3,600. So $3,600 plus the $2,000. But that $5,300 you'd only get it if your child was born in January. So it would be down from that otherwise, but still a ton more money than what we're getting today. So let me pull up the actual text of the bill, and it is right here, and we can go to the very top. And I highlighted a few things. Again, just to roll through it so you can see the text. Monthly advanced payment, fully refundable, and it's going to be for $250. And then there's those income thresholds. So the initial threshold amount is going to be $150,000. You can see that right there in the case of a joint return or surviving spouse. And then it's going to be $112,500. And I think that's the same number that we saw previously. I think it was for all other filers, it was $112,500. I believe that's the number. But that secondary threshold is still going to be $400,000 for married filing jointly, and then $200,000 in any other case. And then it's putting another threshold that I don't think was in there before, $300,000 in the case of a head of household. And currently, if we go to the current child tax credit, I don't know if it outlines it here. Yeah, it's just the $200,000 and the $400,000 currently. That's what I thought it was. I didn't think there was a third one in there. So it's just those two. So let's go back to the text. And so it's up to, so it's $400,000 for that second threshold. So $150,000 for married filing jointly. So a lot more people are going to be looking at this $150,000 threshold to make sure that your modified adjusted gross income is at that level. And this is where saving more money into your traditional side of your retirement plans could maximize the child tax credit. Now, there's a phase out, just like there was before, and there currently still is with the child tax credit. But if you want to get every last dollar out of it, that's what you need to meet that requirement. Interestingly enough, when you're doing these calculations, and I know for the current child tax credit that if you have more than one child, it is not, the threshold goes over the total amount. So you lose $50 per thousand over $400,000. So $400,000 is the beginning of the phase out. So for married filing jointly, $400,000, but your phase out, or more specifically, my phase out, if I looked at that, because I have 4 kids right now, and 1 on the way, my phase out would be significantly higher. So it's not per child at the same phase out. If that doesn't make any sense, let me know in the comments down below. But it would go much further. But anyways, in order to maximize those dollars, $400,000 is for married filing jointly would be the most that you could earn in order to still qualify for the $2,000. So that doesn't seem to be changing, except for the head of household, which is a little bit lower at $300,000. Or if you're looking at the other way, singles is $200,000, and the head of household will bring it up to $300,000. That's still the same to the $2,000. It is that additional $1,000 to bring it up to $3,000, or the additional $1,600 to bring it up to that full amount of $3,600. So those are those thresholds there. And again, I did not see throughout this entire text, and I was searching for it, for that $2,000 baby bonus, but it doesn't mean it's not going to end up in this proposal. It is fully refundable. So if you're on the other side of the income threshold and your taxes go to 0, and it basically says you could still qualify for this credit, that you will get it fully refundable. And it would also make this permanent. There is an inflation component to it. So that is also important. Monthly checks, and basically that's what we're taking a look at today. That's really it for the child tax credit. But what you want to take a look at here, again, pre-planning here, is if you're wondering, should I make this contribution? Will this go into effect? We don't even know if this is going to go into effect, but should I make this contribution to the traditional side or the Roth side of my retirement plan? Maybe consider making that contribution to the traditional side if your workplace plan allows. Of course, you could do this in an IRA as well. Make that contribution to the traditional side of your retirement plan. And then, if you want that Roth money and this doesn't go into effect and that's what you're trying to go for, then you could just convert before the end of the year to still get that same those Roth dollars that a lot of people want instead of the pre-tax money. But if you're over these thresholds, keeping it in that traditional side reduces your total tax liability. So maybe that would help, maybe not. But let me know in the comments down below. If you've enjoyed this video, be sure to subscribe, and we'll see you on the next one.